Congratulations on the purchase of your home. Whether you've owned your home for 2 months or several years, we're glad to have you as a customer. VHDA is dedicated to working with you to ensure your success as a homeowner. This video will help you identify how your financial decisions impact home ownership and important tips to consider for making smart financial decisions. Now that you're a homeowner, it's more important than ever to maintain a budget and make smart financial decisions. These habits will help ensure you're able to make your monthly mortgage payment and meet your other financial obligations. Late or missed payments on your mortgage or other debt obligations can negatively impact your credit score. Additionally, as you went through the home buying process, you worked extremely hard to build your credit. As a new homeowner, you'll want to take steps to maintain and protect your credit. Creating and maintaining a budget is the first step in making smart financial decisions. A budget helps you track finances and clearly lists what money comes in, for example, income, against what money goes out, for example, expenses. Now that you're a homeowner, you're encouraged to maintain the personal spending and savings plan you created when you attended VHDA's free first-time homebuyer class. Using the plan can help ensure you're saving money and that you know where your money is being spent. You can download a blank copy of the plan from vhda.com/spending and savings plan. For more information on how to start a budget, view our Creating a Budget video at vhda.com/homeowners. Additionally, many banks and credit unions offer budget resources and expense tracking tools. Stop by your branch to see which services and resources you have access to use. Finally, review and adjust your spending habits every few months, especially when your income and/or expenses increase or decrease significantly. In order to create and maintain your budget, you'll need to track your expenses. A good tip is to track your expenses and purchases for 1 to 2 months in a small notebook you can carry in your pocket or a smartphone app. Another tip is to keep good financial records, such as paper copies and digital copies, in a secure fireproof and waterproof storage box. Saving receipts can help you identify where your money actually goes each month. Another important tip is to take steps to maintain and protect the credit you worked hard to build. Debt can accumulate quickly, so avoid shopping and payments made on credit when possible. It's better to save up for major purchases so you can avoid the interest charges which come with buying on credit. If you do purchase items on credit, for example, a new bedroom set, be sure you thoroughly understand the terms of the purchase and what your obligations are, for example, deferred interest and deferred payments. After closing on their home, new homeowners often receive solicitations and offers for credit cards, refinancing, and second mortgages. It's a good idea to consult with a housing counselor before agreeing to any of these offers or before entering into a payday lending or title loan contract. You must make your payments towards your debt when they are due. Late or missed payments can negatively impact your credit. Once you become a homeowner, that is an unspoken sign that you have a good credit score. As such, family members or friends may request that you co-sign a loan or credit account on their behalf. To co-sign a loan means your credit score is checked to help your family member or friend become approved for the loan or credit account. Typically, borrowers are required to obtain a cosigner if they are not able to qualify for the loan or credit account on their own. Also, it means you legally agree to take over their payments towards the loan or credit account if they stop making payments. This could put you in a difficult financial position if you are not prepared to assume those payments. Loans or credit accounts you co-sign will show up on your credit report, impact your credit score, and increase your debt-to-income ratio, or DTI. Additionally, with most loans or credit accounts, you are not able to remove yourself from the debt or remove yourself as the co-signer. The decision to co-sign a loan or credit account is personal and one you should not rush. If you're asked to co-sign for a family member or friend, discuss the terms and all your options with a military financial educator or a HUD housing counselor. In addition, military financial educators or HUD housing counselors can provide services such as specific one-on-one help to make your household budget, to create an action plan to reach a financial goal, and more. To locate a military financial educator, contact your base service center. To locate a housing counselor in your area, visit vhda.com/housing counselors. You are strongly encouraged to be proactive in planning how you will save and spend your money. Pay yourself first and arrange for a portion of your income to be direct deposited into your emergency savings account. Any amount you can realistically save is better than not saving at all. This account should be separate from others you have. Also, you should not access the money in this account for anything but emergency expenses. For example, don't withdraw money from this account in order to put a down payment on your summer vacation. Prioritize your needs versus your wants when it comes to how you choose to spend your money. For example, a need is to purchase groceries for the household each week, but a want would be to include several boxes of cookies in your shopping cart. Identify recurring expenses or expenses you know you will have around the same time each year and plan early to save for them. Examples of recurring expenses include, but are not limited to, back-to-school shopping, buying your spouse an anniversary gift, or purchasing gifts during the holiday season. Set immediate goals, short-term goals, and long-term goals for how you want to use your money. An example of an immediate goal is to buy generic household products instead of name brand to save money. An example of a short-term goal is to save money to book a vacation next summer. An example of a long-term goal is to pay down your credit card debt. But saving your money and planning ahead of time how you will spend it doesn't mean you still can't have fun. When you do spend your money on activities, like dining out in a restaurant or going to a concert, try to stretch your dollars as much as possible. Use coupons when making purchases. For example, keep coupons you receive in the mail or from merchants in an envelope you can carry with you. Another tip is to use websites and apps to check for deals and special discounts for merchants and activities in your area. This could even be something you do while you're waiting on the checkout line. Change your habits to take advantage of advertised promotions from businesses you frequent. For example, go to a restaurant on a weekday when kids eat free instead of on a weekend. If available, you might also want to join a business's loyalty program to receive store credits or special discounts. If you're experiencing a financial crisis or hardship, contact your lender to identify next steps and then work with a housing counselor for help with setting financial goals. Remember how hard you worked to get your finances in order and build up your credit so you could become a homeowner? We remember how hard you worked too. Now that you're in your home, making smart financial decisions and protecting your good credit is one of the most important steps you can take to being a successful homeowner. Be sure to view our other video, Creating a Budget, and other helpful information at vhda.com/homeowners.